All right, sorry, I'm back. I got disconnected somehow, and I was talking away. Everybody there? I'll just restart my little spiel. Anyway, we're looking for shorts in gold. We just got new numbers. Okay. We've had a small reaction off of it. We're looking for a push up into this 48.8, 49 area, and then look for a fade. We're looking for shorts in gold. The bigger charts are screaming short. Is being this level of 4320. Did you guys hear me talk about this 4320 level? Okay. I just didn't want to start blabbing about stuff you've already heard. So this 4320 is super a pretty big support. It's been propped up several times here. We've got tons of volume underneath it, buyers. So taking these right here, like this pullback, would be suicide at the moment. When this thing gets broken, it's obviously going to push down hard, but I don't think it's going to be today, at least before pit anyway. But I'm not here to predict stuff either, so we'll just take it as it comes. But what we're interested in is a pullback into this 48.8 in oil, or in gold, sorry. We've got our momentum dropping off. So 48 even is where it was where we want to go short. Unless this wants to push above this. This 48.8 level. We've got a double top here, 49.3. So 48.6 short, which is should be a good aggressive entry. We've got a good fade opportunity with this 48.8 level. We've got some pretty good volume stacked up here at swing high. So we're gold. First target 47.6. I'm gonna move my runner down here. So we're short gold. Our first target's down here at 47.6. A double top, 49-ish. And then we have our level at 48.8. So we've got some good protection above us. The bigger out charts are showing short. This 40 to the 50 on our 20 tom bar. Pulled back into it. So we're short gold at 48.6. is up here at 49.6. Oil's still shell-shocked over here. Doesn't know what it wants to do. So we had a pretty abrupt move up into our levels, and it stopped pretty hard. Tried to reattack it, and it failed. So this might take a few minutes just to play out, but it's a good area to short. We've got volume sellers stacked up here. And nothing really below us until yeah, nothing below us as far as big time buyers. So we should, when it decides to go, it should go. It might wait to the bottom of the hour to pick up a little momentum on a new bar. On a small bar, when you're looking at market profile, there's a point of control at 47.7. So it should get sucked down to this area right here where our target is. I only do 9 tom bar on the NASDAQ. Ninja. I think this midpoint would be a good place to shore up your potential runner stop when we get there. Because you have this little area of hesitation is where our target is, which is good. And then our next push down to the mid should be fairly quickly. The swing low got broke. Our target's just above the previous swing low, so should be in good shape. And keep our stop up here until we hit target. And then our ATM moves it to even. We also have this overnight structure line, which is right at the swing low where it reacted, but it's been kind of played out. So if it does react and bounces here, we'll be at break even on our runner. We'll be out of our first target. A little bit of volume that's stacked up right here, which is very minimal compared to usual. So it should drag right through it. But if you get antsy and you want to take some profit, you can take profit anywhere you'd like. There we go. Just need one little more push through here. There's a little bit of volume stacking up here. I said that just before, but it should drive right through it. Really should. We had a hit no fill, or I did at least, because it moved my stop.
Target filled.
So there it goes. Push through it. So now we're at break even +1. I'm going to take this overnight structure off. What's going on? Oil's still shell shocked over there. So we've got our stop move to 48.5. Our next stopping point on our levels is the midpoint at 46.7, which is a spot that it could hesitate. But statistically, if this gets broken, which it most likely will, and doesn't hold, then we push to our next target down here at 46 or 44.6, and then ultimately down to 42.5, which would be pretty sweet. So we'll watch this midpoint. It's slowly leaking down there. We broke this swing low. We'll give it some room to get away from us, and then we'll so the 7 tom bar is where we decided we'd like to run our stops, and that's at 48.7. So we're not quite to break even with our 7 tom bar. So once we do, and it keeps pushing down, we're going to give it 2 or 3 bars, which is going to give up a little bit of profit on our runner, but it's going to open it up for a little pullback, which we might get here at the midpoint. And if we can hold the pullback, we should push down into the 44s, which would be really cool. Good job, guys. So stop to 48.3. $46.5 is close of yesterday, according to the bartender. Hans, 46.5. All right, so that's right around our midpoint. So yesterday's close is right around here, according to Hans. So if you guys want to tighten up your stop, or if you want to give her some room, you know, we do have see, I'm trying to find something negative here to be cautious about. You know, the midpoint here at 46.5 is also very similar to the midpoint of this push up. So you might see a little hesitation here. There isn't much volume building up below us. It's abnormal. So it should just keep slowly pushing down. So let's see if we can, checking out oil, it still doesn't know what the hell just happened. It's chopping sideways. I'm going to check out some volume on crude. So like yesterday when we were watching gold, it was real sporadic as far as where the lots of buyers were, and that's how oil is right now. Like there'll be 2 or 3 ticks where there's not much, and then there'll be a block of like 2 or 3 ticks where there's 100, 200, 100 lots sitting there. So that just is it's a foolproof way to say it's going to chop. We've already really had our big waterfall in oil. So the chances of this waterfall happening again, it's possible. Anything's possible with crude, but I'm not thinking it's going to happen. Maybe. You can never say never. Our midpoint, 46.7. There really isn't even any volume stacked up there. So $47.2, some volume came in. That's sitting here. But gold's an animal. It loves to chew through walls of volume. It loves liquidity. So we're on the right side. We banked some profit. So I'm going to give it some room to see if I can get that next push down. And if we don't, then we had a good trade. And if we do, then that's what the runners are for, right? Volume's going away, so it's a spoofer. He's trying to give people a pump fake. We learned in junior high basketball not to take pump fakes, right? All right, so here's our midpoint. $47.9 is our next stop. Our 7 tom bar, which almost closed, but it didn't. So it's a little, this, as soon as this bar closes, this will be official, but it's not official. But I'm going to move it there anyway. So 45.5 is a little block of stuff down here. I'd be ecstatic down there to fill it. So just to review this trade, this was kind of a textbook double tail second wave off of, I don't know if you really call it, yeah, it's a second wave. You have to be kind of loose with your definition. It's 2 or 3 ticks off of a second wave. So here we go. $47.5 is our new stop. So 45.5 is our next little blip of volume, and it's only 70 contracts, which is about triple the normal, but it's still there, but we've also chewed through a lot more. 47.1 is our new stop. Yeah, the midpoints, you know, these, when you go from one to the next, it's a good spot to take, you know, like yesterday when we, on our NASDAQ trade, we pushed right into the target within 2 or 3 ticks, pushed through us maybe 2 or 3 ticks and chopped for the next half hour. So they're definitely spots to take profit. But we're giving this thing, you know, I mean, we've really only given it 7, 8 ticks of wiggle room, and it keeps pushing in the direction we want until we see it, some volume come in to kick it back the other way, and that is at 45.6, 45.5, and the volume's starting to slowly go away too. So it's gone from 70 to 80 back down to 60. So people are kind of removing their stuff because they see this thing coming in hot. If they're looking to pick up a so let's see if this holds. 47.1's our stop. So anyway, back to our trade here, right? We pushed up, came pulled back. We have our level print, double top, second wave, double tail, bam. So I have 47.1 as I'm speaking out of terms. It's current 7 Tom bar high. So, or I have it as 1 tick above the high of the 7 Tom bar candle, which is 47.1, which looks very similar to the 4. I was saying previous, but that's not what I meant.
Stop filled.
All right, we got stopped. That was a good run. There's our midpoint, right? Gotta love them. So this little pullback and the next push, I'm just looking at short term. It looks like it wants to be kind of oversold. Our momentum's starting to change. We've got potential divergence setting up. Our smooth is still saying it's over bought on the bigger bar. So this could be another push down. I'm not going to take it right away. I've had my fun here. This was a pretty clean trade. I've just learned when I see my short-term bars show overbought or oversold, I respect that, because we could get another push down, but it might not go far enough to even hit our target. I mean, we were talking pushing here, and it probably will. It depends on if this mid holds. If this mid catches some support, we could either chop or push back up to that 49 level. All right, so hit me with some questions. Anybody have any questions or comments, or anybody new in the room we need to say hi to? Hans, you're being kind of quiet today. Yeah, so welcome to the room, and we're excited you're here. We have a lot of fun in the mornings, banking ticks and taking good trades. Being patient. Yesterday we were super patient, right? Today we were patient, but it presented itself early. I was a little bit quicker on the trigger. I saw some comments yesterday about how fast that trade was, and it was fast, but I did talk about it a little bit before it happened. But when the NASDAQ decides it wants to push, or one direction or the other, off of a pullback, it usually goes pretty hard. You can trade on Ninja 8. My charts are on Ninja 7. It depends on if you want the indicators and the levels. The levels will be in 8 eventually. I think first version is going to be 7, but 8's shortly behind it. I like 7 because yesterday I was talking about automation, and I do some automation, but Ninja 8 has a few little issues with runners and multiple contracts and automation. So that's why I'm in 7. Yeah, the levels will be coming soon, but I've been saying that for the last 2 weeks. Every time I get a version, I change one little thing, and then the turnaround time is fairly quick, but not quick in your guys' standard. So they'll be here, and they'll be awesome. And you guys can trade them, throughout the day when I'm not here. But I'm only going to make them available to people in the room, I think. The automation stuff can be. We can talk about it. It's pretty cool. It basically trades whatever you want it to trade on a bigger bar. You know, some days it won't take any trades and some days it'll take 3. But it does really well. It's based off of volume and momentum. So it's 2 things that the market needs to move. And that's what it picks up and that's what it trades on. So there's no indicator or anything that drives it. But it likes to lay in the weeds and take fades and take breakouts, and it's pretty cool. I don't really run it much just because I'm in the room. Well, that's not true. I test it every weekend. I run it back on replay and trade it. Test it and tweak it, not tweak it, test it and push it and challenge it. And it does, it's pretty impressive. How often you more than one trade at a time? No, the automation can run right on your computer. It's just a strategy. Half a minute, 1 trade at a time. Maybe once or twice a week, if that. But you know, yesterday I had the opportunity to be in 2 trades, and I just decided to be 1. So I'm doing I'm in the funded trader prep, so I've got kind of a lockdown on my contracts that I can use. I think I have the ability to use 5 or 6 at one time. So if I'm in the NASDAQ, I trade 6 in the NASDAQ just because it's $5. I like $10 ticks. That's kind of, or when it comes to NASDAQ, that's kind of a nice feel for me. Or 60, it's equivalent to oil, and I guess I'm not saying it correctly. I like it to be consistent, so I do double the amount of contracts on NASDAQ just because it's half the price per tick. So the whole Ninja 8 and 7, it's kind of a mixed bag, and it's a mixed bag in the room. And so that's why I just decided to stay out of it. Hans has trouble with it too. Some people have really good luck. But I think down the road, Ninja Trader 8 is going to be pretty sweet. It has a lot of built-in stuff and a lot of cool stuff from what I hear. I haven't really experimented with it. But if you guys want to dink around with it, you know you can run it at the same time as you're running 7, right? So it might not be a bad idea to have them both going and just be able to navigate your way through it. So next time we dive in, so when we decide to dive into Ninja 8, you guys can teach me how to do it. You know, it looks different enough to kind of make me think about doing stuff, and that's just 7 is just automatic. I can do it without even thinking. But Ninja 8 makes me think, and so I need more practice with it, obviously. What is midpoint? Midpoint's one of our levels, and it's a midpoint of a measured move that we measure. The levels measure, and it's a stopping point and kind of an over-under roll around number. We used to take trades off of it, but those trades weren't as high probability, and you can see why, because it's kind of all over choppy. When you get confirmation that this level's rejected, then you get your push. But in the meantime, when you're playing with the 4 tom bar, there's a lot of times that you're going to get spanked, right? So I like the high probability. So I like these. Come on. I like these second wave pullbacks, rejection of the levels, you know, up here at these higher extensions that try to suck people in. People get upside down and then bam, they drop it on them. So that's where this level would come into play, this 44.6. We knew this pause was coming. So we either can give it a, you know, a pretty good room to pull back and hang in there. Hans, you're probably hanging in there. But to me, 47.7. So that's 10 ticks, right? That's $100 for trying to collect $100 bills. Do we want to give one up to see if it's going to hold? I don't know. I like to go from line to line, get clean takes. Yesterday was a clean take. There was a clean take, and then wait for the next take. Because I think overall, when you see your targets line out there and you can nail them within a tick, and then it goes choppy, then that says something. You can just go from level to level, take your ticks and bank them, and the next thing you know, you're sitting on, you know, $300 to $500. So the next level down here is, so how we're going to approach this is the next level down here is at 44.6, which is this swing low. Is it going to react off of it? Yes. Very rarely does it blow right through here. The NASDAQ does sometimes at open, like yesterday it did. It reacted off of it and went 8, 9, 10 bars straight up. But then we got our pullback, and there we go. So I lost my train of thought. Push down to this level. If we get a break and a pull back into it, which we probably will, then we take it down to this target 1. And if it doesn't break it, then usually it's a place to fade, just like we faded here. So, you know, this trade, right? We have a level. This is an old trade that we would take. That we'd take the trade. We'd be in it, I don't know, 4 or 5 ticks of profit. Everything's cool. And then all of a sudden here it reverses in our face and pushes up and takes us out. And then farts around and reverses again and goes in the right direction. We know the direction is down, right? But it's the game, and our edge is to play the levels because they're spot on. We called this level 15 minutes before it hit it. They're not available yet, Dr. Bedford. And it's probably DR. I'm saying doctor. It's probably your initials. I'm just going to call you Bedford. I'm assuming you're from Texas, right? All right. So the levels aren't ready yet. I've got a friend helping me program them, and so we go back and forth, and they need to be perfect. The calculations are perfect. Cosmetics, I'm just making a little more perfect. So you are a doctor, or that's your initials? Gotcha. All right. I do have a few doctor friends that sit in their office and trade between patients, and a couple dentists, but they miss more trades than they see just because they're in and out. So this wrapping around this midpoint is exactly why we don't take trades off of it, because it's just sometimes it ruins your day. Just emotionally going through this, it ruins your morning and get stopped out, and then wonder, oh my gosh, am I going to take the next trade? You take the next trade, and then you get into a bunch of chop, and next thing you know, an hour goes by, you haven't made any money. So I like to just sit and wait, sit on the sidelines, and then go in at the end of the game when it matters and you have a chance to win. All right, Hans must have woke up. So Hans thinks that our levels need to be little emojis of donuts lined up. So when you look at, like even a 7 tom bar, and you look at momentum on it, it's showing that it's oversold. So this little push, it maybe get here, it might not, and it might chop, and it looks like it wants to chop, and pit on oil just opened and it's pushing up. We have this extension, we have new levels here at 34. So we'll pull back into them, and a push up would be a trade, right? But charts are screaming shorts, like short, short, short. We've got this massive support here at 43.20. And volume is sporadic through here. So it's going to chop. And when you get into a fast, choppy crude market, I don't think it's very much fun. There's a lot of volume pushing through here on oil. I watch Bookmap. It's third party, and it's I just have it just because, we really wouldn't need it, but I just like to have it just to see where all the other players are playing. Helps me guide you guys through where we need to be. So when you zoom out, you see this confluence up here. Confluence down here. That's overnight. so that some of this overnight stuff hasn't been touched yet. So they need to be taken with a grain of salt. Like if they've been, touched and abused overnight, then most likely they're not going to be as impactful. So that's why I shut them off and go with, so these are our daily numbers. So these are good throughout the day, big structure. And then when we recalculate, there's going to be new levels that calculate in between here. So when you get down to the daily extension 2 or target 2, or that's kind of a spot to be cautious. Just like we got down to this structure or this target 3 on the overnight number, it stopped it in its tracks. Yeah, it's kind of expensive. I think like $300 a month, maybe. Yeah, it's like $300 a month. Is it worth it? I don't know. I've just gotten to the point where I like it. So like right now, if you're looking at crude, we've got big volume on both sides. And so I don't know if it's just going to kind of float around. I would be a little nervous. But that's just me. I've got a decent profit for the morning, and I don't feel like rolling the dice on crude today just because it's so, the volume is just smoking through and it's sporadic and it wants to drop, but people aren't letting it, I think. And so it's, anytime it gets to a spot where it reacts like this level here, it just stopped to the dang tick and hesitated. We've chopped around it a little bit, so there's going to be a little wiggle room on each side, but this is your spot to fade off of, right? Push up, because we've come down we've come down to our level, so this would be a fade or a continuation down. And you can see that these levels are, spread out pretty good, which means that there's more volatility. When you look at the gold numbers, they're pretty tight just because of the range. And so that's what's nice about these levels, is they expand and contract with the volatility in the market, so it doesn't give you a target of 50 ticks when you're most likely going to get 10. I've never traded it, Jim. I don't even know the symbol. I don't even know what the tick size is. I'm assuming 5, right? Yeah. Not sure what the volume is like. So oil has a buyers stacked up in here like cordwood, stacked tight. Gosh, is that a Montana term or what? Or sane? Gee, it sounded bad. Cordwood. 4 times. They're updated 4 times. How do you know about Bozeman? You went to school in Billings? What school? All right, you just dated yourself when you said Eastern. Where do you live, pilot? Weibo? You're from Weibo. Awesome, man. Welcome. Yeah, I want to add the ZB. Thing with the ZB is it's just so touch and go. That's not the right term. It's like one day there's a great trade, the next 2 days or 3 days it doesn't move. But when it goes, it goes. And the nice thing is that you can get into a trend on that puppy and ride it. Let me pull up ZB here for a second. Yeah, it does stair step pretty sweet. It's traded on a small bar though, because they manipulate it pretty tight as far as I'm just setting up this chart really quick. So it goes from 6:20 to 11:30 are the pit hours. Just trying to get some levels calculated. So let's check this out. It's on a 3 tom bar. So we've got our open here at 6:20. Right? We had a reaction off the mid. We're up here at our strike line, which is our line that we take trades, right? At 56. We had a reaction to it. Our momentum is pushing pretty good. So when you look at ZB volume, it's insane, put it that way. So they're holding it at 56.1. There's 800 contracts holding it there. So it's going to tap back and forth, and then if the buyers, which there's a ton of buyers, there's 1,100 below, once they wear out that 800, they're going to push. So you're going to watch it tap between 56.1 and 56.0. And so there are actually traders out there that'll go, that they'll scalp one tick at a time. So they'll be, they go on the side of heavy buyers. So they'll be buying at 56 even and looking for a tick or two in that direction. And each tick is 31.50, I think, 31, right around 31. So, I mean, that's $60, two ticks. Yeah, 31 quarter, sorry, 31 quarter. But like at 56.05 up here, there are 1,200 sellers. So once you get, this is a good instrument to trade like after news or FOMC or anything where there's any catalyst. This thing gets rocking and rolling. But you can see what it does with the levels. I mean, it goes to the tick. So this is where you need to decide, you know, since the range is so tight, our targets are tight, right? I mean, it's literally 9 ticks. That's $270 though, but we very rarely get in at each level and out at a level. So say half of that, 4 or 5 ticks. But we also have these other targets above that it usually pushes to. I like 3. I think 2, it depends on the speed of it. Like today, probably a 2 might work, but I don't think 2 works very well on Tom Bar. It gets kind of funky. You get these little gray things. I don't think there's enough data in there. It gets funky. So you can see they're temporarily holding it at 56.1, and there's, you know, there was 800 contracts when we first started talking about it. Now there's 700. So it'll push up, tap a few, push down, push up, tap a few, push down, and then once these contracts are done, and there's more buyers, then it'll push and it'll just keep ticking its way up. But at 56.5, there's 1,100 sitting there. So what they do is they push it up into those levels, they build their positions, and then they let it go in the direction they want it to go, and they bank big time. Yeah, ZDB is pretty good. I mean, slippage wise, yeah, there's no slippage. I mean, we each could trade 10 contracts, and I don't think there'd be any slippage or any hesitation in price. So it's like watching paint dry, but when you get to specific levels and you know which, just based excuse me, just based on the momentum and I'm just based on the momentum, I'm assuming it's going to push. So you know, this, say a close of this bar and watch the volume, and in your next bar maybe even lay an order down here at 56.1, see if you can tap in, and then you'll have, since these are such small bars, you would have a really tight stop. And that's how you trade it, with tight stops. and you just look for your quick little targets and your quick hits, but you can pick up 90, 120 bucks pretty quickly. Let me fix this. Yeah, I can do a webinar on that. And to answer your question about the iceberg thing, not sure how it would happen because it has to detect and track all of the incoming orders, which is possible because it's, but I can already see them with Bookmap, and does it matter? Do I know that they're there? Sometimes. Like yesterday, it helped a little bit. But some days, you don't even know they're there until they're filled. Something's not right with this. A second here. Shouldn't have all these other levels on here. So we're still kind of dinking around with crude. Gold, same thing. We'd still be sitting in this trade, sweating bullets, talking about, you know, you can take profit if you want, blah, blah, blah. So I need to rebuild a chart here because this NASDAQ one got screwed up. So catch you later, Jeff. Good job today. So there's something going on with this calculation is something not right, and so I'm not really excited to give you any numbers because these other levels shouldn't be plotting. So I'm trying to figure out what's going on here. I don't know what is up. Well, I'll tell you what was up. I had my pit open and close wrong. I had 14, my time 14:30, and it's actually 14:15. So 15 minutes screwed up the calculation. That's why it needs to be precise, obviously, because it calculates off of those times and opens and closes. And okay, so here's our overnight structure. We've been wrapping around this this level at, here's our recalc, here's our open, reaction off of that open. Here's our strike line, which is where we take trades off of. So just looking at the smaller bars, it looks like it wants to push. And so this would be a fade of this number here. So a push up and a pull back. These numbers are fairly tight because of this chop. So that's where you have to be careful. They're not that tight. They just look tight. So a reaction off of this would be a drive to at least the mid. A hesitation. We've got a confluence of levels over here at 75. And those are from yesterday. So the NASDAQ and the open, you need to give it a couple minutes to give you its pump fake. And look how fast it's moving. And this is a 9 bar even. So this would be a failure of this level would cause for a push down to T1 at 56. But if it decides to push above and pull back, we've already broke through it and it failed. So my guess is it's going to push up, but you don't guess. You have to take it as it appears. So we came back and retested, and it looks like it wants to push short. down to T1, but it's awful choppy. So this strike line looks like it's wants to hold it at 64 half, 65-ish, which will cause a push to target 1 at 56. But there's a ton of volume rolling through here, and this 9 is even fast. I can't imagine what a 4 is like at the moment. So we have a confluence up here at 73. So the entry would be $64.25, which is the confirmation bar here, but it's chopping big time. I said 64, I meant 62.25, sorry. So these, yes, confluence strengthens levels. So there's your drive. It's going to watch T1, which is 56 even. If it doesn't make it to T1, then you better watch the midpoint, because that's usually where it wants to push if it doesn't get to this T1. But the 65 level is definitely holding it for the time being. And T1's at 56. If it decides it wants to push higher, 73 even is where it's going to be drawn to. So once you get your 3-4 minutes and it settles down like it just did, now it's time to look for trades. We know that it tried to push to T1 and failed. We know it's coming back to 65 to test this level. Don't be surprised if it drives to 73. But this move to T1 isn't done yet because it didn't tap it. If this would have tapped and it reversed, then more times than not, you'll see it push through the strike line all the way back to the mid. So we had another failure at this 65 level. So your initial short over here, you'd still be in because you're up here, right? So you'd still be in the trade looking for 56 as a potential stopping point. Later, Johnny. Sorry, John. The red arrows are pivot scalper levels, which is baked into the double tail indicator, and it marks significant swing higher lows. So what I'll do is I'll leave these levels up for a little bit. I'm gonna run. I'm done. I want to look at, yeah, see, we're still chopping in gold. Oil still shell shocked here. Watch this 43.20 level. It looked like it just got broken. Let me look at some volume real quick. It looks like the big number they're protecting is 43. This 43.20 has kind of been breached already. So the next big target that they're trying to prop up is 43. So it's pretty choppy. I'm glad you guys liked it. Like I always say, I always have a good time trading with you guys, and thanks for everything. So I'll see you in the morning. Tomorrow we've got inventory, I believe.